Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. Tesla has been raising the price of their cars all year. The prices for Model 3 and Y are up nearly 20% for the year. Simultaneously, the waiting list for a new Tesla continues to increase. Also, I'm not sure many people factor in the fact that these waiting lists are increasing whilst production levels are increasing and planned to continue to increase. Let me explain that to make sure you understand what is happening. Currently, the Model Y wait time in the US is not until June. Well, by June, we might expect Texas to have a run rate of possibly 20,000 vehicles a month, going by the ramping of Model Y in Shanghai. Of course, Texas could ramp much faster too. But in other words, the amount of Model Ys being produced is not linear by June. We're expecting a high level of production by this stage. Therefore, demand for June being 8 months out, and although Fremont may only be producing 20,000 a month, these will start to be supplemented by additional production coming from Texas. Then when you factor in the price rises, which should reduce demand, we are seeing increased demand. I really think there is becoming a more collective awakening of consumers that are starting to realize that EVs are the future, and obviously Tesla is the future of EVs. There are even baby boomers I talk to who are looking at buying what they call their last car and starting to think that FSD would be a brilliant thing to have, and that when they get older, they may not be up to driving, but this way they'll still have a car that can drive them. Tesla has created a great product, but it's taken a while for the masses to realize. Well, I don't believe we're even close to the masses yet, and perhaps even only just hit the stage of early adopter after innovator. But either way, it's a lot of demand already, especially when relative to how many vehicles Tesla can make. Yes, a great product at a great price. And now the demand is growing, then perhaps the product price can match closer to the value that it offers. Oh yeah, sure, Teslas are relatively expensive compared to a Toyota or so, but a Tesla is vastly superior to a Toyota. Toyotas serve their market. A Tesla is a luxury car. Tesla is comparable with BMW, Audi or Mercedes. To be honest, I think BMW is possibly the closest out of them, and it's a brand I'm also familiar with, having owned about half a dozen myself. Comparing an entry-level BMW 3 Series with a rear-wheel drive Model 3, the BMW starts at $41,450, but when I start adding the extras that come standard on a Tesla, then there's easily another $2,500 to $3,000 there, and something tells me that BMW's driving assist package doesn't quite offer the same level of assistance when driving a Tesla on autopilot. BMW can't even put a price on that, because it's simply technology that doesn't belong in their wheelhouse. Whereas the Model 3 starts at $45,000, which is probably very close to the BMW with the Tesla equivalent options. The BMW does do 0 to 60 in 5.6 seconds though, compared to the Tesla at 5.8, although this difference accounts for the new motor that Tesla are using in the Model 3 now. Tesla have recently incorporated the Model Y motor into the Model 3. This has about 9 miles extra range, but has made the 0 to 60 time half a second slower. But the rear-wheel drive version of the Model 3 now has 272 miles of range. Oh, and although the Model 3 is $45,000 now, it was under $40,000 only recently, implying it was even a fair amount cheaper than the BMW before this price rise. And as we know, the Tesla was also getting a lot more gross margin per car sold. Oh, and now at a similar time to this $5,000 price increase, the car has also cost almost $5,000 less to build due to converting the battery pack from nickel to iron-based. Yes, the Model 3 in Fremont must have some crazy margins already, let alone one day when Tesla make it from front and rear die-cast molds and their own in-house LFP battery. Yeah, the future of Tesla is exciting, but it will take some time, so in case I haven't told you recently, do not sell your Tesla shares anytime soon. And Tesla only raised these prices due to demand getting out of control and any alleged chip shortages. So we can all agree that a Tesla is fairly on par with the value of a BMW 3 Series. But Tesla makes more than typical family sedans. They are also renowned for their exceptional performance. So what say we compare the Model 3 performance to the BMW equivalent, the benchmark of high-performance sedans, the BMW M3. The Model 3 performance is four-wheel drive, so we'll take the four-wheel drive version of the M3, the xDrive sedan. Starting price at $77,000. The Model 3 performance is only $59,000. 0 to 60 time for the BMW is 3.4 seconds, whereas the Model 3 is 3.1 seconds. Of course, we had to add things like driver assist package and all that too, although the BMW does have a few unique options that the Tesla doesn't offer, like ceramic brakes, but the Model 3 performance does have great brakes. Anyway, we're probably comparing a slower $80,000 car with the equivalent Tesla costing under $60,000 car. The Tesla is relatively good value in its class. No wonder it's the best selling in said class. But these BMWs come with a 3-litre engine that's got to range from something like $3,000 to $5,000 a year on fuel. Well, perhaps to charge your Tesla for the same driving, you're looking at perhaps 1/5 that, or even less if you have solar to complement too. That's a thought. The more electricity we consume, as the fewer fossil fuels we use, then our electricity bill will increase, making solar more feasible with a better return on investment. Over 5 years cost of ownership, that's a further $20,000 saving in fuel. Alright, probably more like $25,000 after servicing and maintenance. The cost of ownership on an M3 over that period is more than 5 times the cost of ownership of a Model 3. Alright, perhaps not all consumers have gotten their heads around it yet, that there is a huge cost of saving in ownership. And again, at the end of that 5 years, if you're selling, well, those BMWs in a normal inflationary environment, they've probably lost at least half their price from new. Whereas Model 3s, they were holding their price impressively even before any supply chain issues or chip shortages. Again, not something the consumers likely realise just yet, but it will be obvious to them when they start looking at buying used Teslas and realise it's even cheaper to buy a new one, except you have to wait, because everyone else caught on to this before them and knew just how good they are. Okay, so there is no arguing the cost of ownership of a Tesla is so much less than a BMW. And I mean, I didn't even get into the potential savings we might see with insurance. But I don't think we can let this tax credit slide though, can we? Right, we should be able to instantly extract an $8,000 rebate off most Teslas too. Except for the rear drive Model 3, as the batteries are made in China. But they still get $7,500 off, which is still more expensive than the Model 3 was at the start of the year without any discount. Wow, Tesla have increased their margins so much. We talk about how they're reducing their costs and working so hard on that factor, but they also keep increasing their prices. Of course, whilst continually improving their product and adding more value through more technology, and retroactively for older models via over-the-air updates. And perhaps some of these price adjustments are preemptive for the upcoming discount and for the tax rebate. But I bet you the waiting list will go through the roof. Put it this way, if you ever want a Model Y in the near future, I'd order one now. A wait that long is tough for something so life-changing. But in the Q3 earnings call, we were told that some of these price increases are due to the extra demand. And this is my point. There is so much demand because this product is great value relative to the competition. And still very few people realize this. And Tesla don't need people to realize, as they don't want the extra demand yet. They can keep increasing their prices and it may look more expensive. But as I just pointed out, it is still a lot cheaper to own than the equivalent in the market. Also, bear in mind that Hertz, and likely other rental car companies will follow suit, will probably order about 100,000 Teslas a year, or possibly a lot more. Tesla does not have a demand problem. These cars are still exceptional value. The prices could still increase another 20% or so, and still undercut the competition for equivalent cost of ownership. The number one thing consumers look for when buying a car is safety. BMW or Mercedes can have all their flamboyant safety features with great sounding acronyms, but at the end of the day, it's antiquated technology and is never going to beat a car design from the battery up when it comes to safety. Tesla make the safest cars, no matter how much extra money you spend on safety features with German equivalents. This is also value. But back to autopilot and the potential FSD to come, well, this is where Tesla is Google and the rest look like the phone book. There is no comparison. What am I saying then? Well, Tesla can keep raising their prices and they'll still be good value. And people will still buy them. When Tesla finally hit volume production with their new factories, then perhaps they might start to drop the prices a bit, or release a standard range version of a Model Y rather than dropping the prices, offer a lower cost model instead, and maintain these crazy high margins. Really, Tesla adding $5,000 onto the price of the Model 3 since only September, and reducing the cost of the batteries at the same time, the margin for that has to be well in excess of 30%, surely 35% at least. And that is with cars being made in California with no die-cast molds. With this tax rebate though, plenty of people will pay these prices for sure, which is a probable chance of the price increases. Tesla know it's coming through, which means there isn't really much reason to reduce these prices for say, I don't know, the next 10 years. Think what kind of margins the Texas long range and performance will have with 4680 batteries with these price increases. Some of you don't believe me when I say 45%. But add a portion of buyers purchasing FSD and we are there. These rebates are a big deal. We will see a lot of profit from the US market. I wonder though how Tesla can manage the pricing internationally where there are not so many rebates. Oh well, I'm sure Elon will think of something. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.